Again, who or what is DeepSeek? The single AI model that is crashing the stock market and roiling Silicon Valley. DeepSeek is a Chinese AI lab that started as a deep learning research branch of Chinese quant hedge fund Highflyer. They've released several different models, all of which seem to be just as capable as the highest-end AI models produced by the recent flurry of Western AI startups. Again, crucially, while all their models seem to be cutting edge, their costs in terms of money and compute needed to train their models is believed to be a fraction of what Western models cost. One model reportedly cost $6 million to train, as opposed to the hundreds of millions of dollars that has become table stakes for other AI tech. Now, this has not been without controversy. The assumption is that these Chinese models, along with others from the likes of ByteDance, which have shown similar cost versus performance improvements, were able to make this breakthrough because U.S.-led export controls over GPUs and other technology may have spurred DeepSeek to innovate and release its models without the latest chips. In other words, they engineered their way around the roadblocks put up to slow them down. Necessity being the mother of invention, or at least innovation around efficiency in this case. Though some have also suggested they might have copied the works of others. For example, DeepSeek v3 sometimes identifies itself as ChatGPT when asked which model it is, leading some to speculate that its training datasets may contain text generated by ChatGPT. There are also censorship concerns. DeepSeek's latest AI model R1 seems to stick to Chinese government restrictions on sensitive topics like Tiananmen Square, Taiwan, and the treatment of Uyghurs in China. But with DeepSeek apps topping the app stores, the suggestion is that none of this may matter. The AI community could naturally gravitate toward using models that are far cheaper to operate. Quoting VentureBeat, the implications for enterprise AI strategies are profound. With reduced costs and open access, enterprises now have an alternative to costly proprietary models like OpenAI's. DeepSeek's release could democratize access to cutting-edge AI capabilities, enabling smaller organizations to compete effectively in the AI arms race, end quote. Why is this having such an impact on people's assumptions? Let's use NVIDIA as the prime example of the potential implications here, quoting Jeffrey Emanuel. Perhaps most devastating is DeepSeek's recent efficiency breakthrough, achieving comparable model performance at approximately 1/45th the compute cost. This suggests the entire industry has been massively over-provisioning compute resources. Combined with the emergence of more efficient inference architectures through chain-of-thought models, the aggregate demand for compute could be significantly lower than the current projections assume. The economics are compelling. When DeepSeek can match GPT-4 level performance while charging 95% less for API calls, it suggests either NVIDIA's customers are burning cash unnecessarily or margins must come down dramatically. The fact that TSMC will manufacture competitive chips for any well-funded customer puts a natural ceiling on NVIDIA's architectural advantages. But more fundamentally, history shows that markets eventually find a way around artificial bottlenecks that generate supernormal profits.